Welcome back to the channel, and we have Zuzu here today, and she's going to be helping us answer and ask questions as we're learning more about mortgages and what we need to know as home buyers.
What all goes in closing costs?
What all goes into closing costs? Well, that's a big, huge question because there's different sections in what's called the loan estimate that all makes up the closing costs. Some of those are origination fees or lender fees. There's some fees that you don't really get to shop for, like you don't get to choose an appraisal or who the appraiser is. You don't get to choose your credit report and things like that. Then there's things you can shop for, which are title company, your lenders and owners, title policies, and who's going to do that. And then there's taxes, and there's a mortgage tax in Tennessee. There's what's called prepays, which is your interest and your homeowner's insurance policy. And then there's escrow, setting up an escrow account, which is kind of like a bank account that you have to hold back every month the taxes and the insurance. And that's all set up. That's all part of closing costs. And there's also sometimes a down payment as well.
Okay. How do I know what's best for me?
How do you know what's best for you? Well, it would be best for you at 7 years old to not buy a house. But how do you know what's best for you? I would say if you have the right team to work beside you, both your mortgage loan officer and your real estate agent, that could really help you in the process of helping you find a home, because hopefully they're going to make sure that you have a good, solid foundation to buy a home, knowing what you can afford and not be what they call house poor, which is you pay so much for your house, you can't even go on vacation.
Okay. What is the timeline of a buying process?
Well, the timeline of a buying process starts with a pre-approval. So a pre-approval can happen, and then it may take you a little while to find a house. But then once you find the house and you go what's called under contract on the house, meaning you have an agreement with the seller to buy the house, that process can be as quick as maybe 8 to 10 days, or it could take a little bit longer depending on how long it takes to get the appraisal done and how long it takes to get all of the underwriting items taken care of. That could be as short as 8 days, but it could go 30 days. And in some cases, there are some lenders that take a really long time, and it could take 45 days or 60 days or like 2 or 3 months. Wow.
Should I get a fixed or adjustable rate?
Well, in this particular time frame, adjustable rates really aren't beneficial. The way fixed rates work, a lot of people want a fixed rate. So a fixed rate is a fixed interest rate. So if that interest rate, let's say, was 5.5%, it's always going to be 5.5%. Okay. But an adjustable rate could be where it's 5.5 for the first year, then maybe it goes to 5.75. It goes up a little bit, or it could go down a little bit. That's an adjustable rate because it adjusts. Does that make sense?
Yeah.
So that's the difference between a fixed and an adjustable rate. Right now, the way the market is, adjustable rates really aren't a benefit. Most of the time, adjustable rates tend to be lower because you're taking a risk that maybe you're hoping it's going to stay low, but the lender is actually thinking, well, maybe if it goes up, I'll get to make my money back. That makes sense? Yeah, sure it does.
You're a loan officer. What is a loan officer and what do you do?
Great question. A loan officer is someone who has been licensed to sell and provide mortgages to other people. A mortgage loan officer collects key information, the key information being your name and your social security number and all the information about you about your job and about your debts and everything about you to determine whether or not you can get a mortgage. So a mortgage loan officer does that. You know what the second question that I usually get asked about that?
No.
The second question is, what is a mortgage broker? Do you want to ask that?
Yeah.
What? Go ahead.
What is a what?
What is a mortgage broker?
What is a what?
Yeah, that. What is a mortgage broker?
What is a mortgage broker?
Perfect. I'm glad you asked that question, because a mortgage broker has the opportunity, doesn't only work as a loan officer for one lender, but provides an opportunity for you to shop a lot of different lenders. So a mortgage broker collects all that information, just like I was telling you with a mortgage application, runs the credit, gets everything set up, does the pre-approval, then allows you to shop multiple lenders to get the best possible interest rate and the lowest fees. It works out a lot better in most cases for you to go with a mortgage broker.
Okay. How do I get pre-approved?
Getting pre-approved is really pretty simple. The first step, you have to get a mortgage application filled out. The best way to get a mortgage application filled out is to fill out the link right below where it says apply with Michael. That's all you have to do. Get that mortgage application turned in, upload some documents, and then after you upload the documents, which would be things like your driver's license and your bank statements and your pay stubs for your job. You know you have a job, right? Yeah, you have a job. Yeah, your job. And yeah, you have a job. I'm sure you do. So you get all of those items in, you turn in those, you fill out the mortgage application, we pull credit, and you get pre-approved, and we let you know how much you're pre-approved for. Pretty simple, isn't it?
Yeah. What is a VA loan?
A VA loan is a loan special for only veterans. Do you know what a veteran is? A veteran is someone who has previously been in the military. You know what the military is? Yeah, I didn't think so. So, now that you know what a veteran is, a VA loan is a loan specifically designed for veterans. It's a benefit as part of the package of you serving in our country. We appreciate your service, and one of my favorite things to do is help veterans own a piece of America using their VA loan. So the VA loan has some very specific things that have to do with it. One of those items is it's 100% loan. There's no down payment. You do not have to have a down payment for the VA loan. You know how much money you have to have for it? Zero for the down payment. That doesn't mean it doesn't cost anything though, because there's still closing costs, and the closing costs cannot be rolled into the loan. What you can do sometimes is you can have the seller help pay for the closing costs, and then you can still get into your home fairly cheaply. But it really depends on whether the seller is willing to help you out with that. A good rule of thumb is to make sure that you've saved up enough money for your closing costs, but you do have the opportunity to have 100% loan with the VA loan. How's that?
Okay. What is a USD loan?
A USDA loan? A USDA loan is a loan for rural development. What that means is it's not in the city. You ever been to the city? You've never been to the city?
I don't know.
I think you've been to the city. Have you ever been to a place that has cows?
Yeah.
Most places that have cows qualify for a USDA loan. The USDA loan is in rural areas where there's like a lot of farmers, a lot of farmland. You can take that land and you can get a specific mortgage just for that land. Interesting, huh?
Yeah.
Goes all the way up to 100% loan too.
That's a lot.
That's a lot.
What is an FHA loan?
That's a great question. An FHA loan is a loan that is guaranteed by the Federal Housing Authority. FHA, Federal Housing Authority. They require that you put a certain amount of down payment. That down payment is usually at least 3.5%. So it's just a little bit, not a lot. But it allows you a lot of times in first-time home buyer situations, it allows a first-time home buyer to get into a home without having to have a large down payment. Does that make sense?
Yep.
Good. So, Zuzu, now that we've talked about VA loans and we've talked about USDA loans, we've also talked about FHA loans, which is Federal Housing Authority, right? So now, tell me, what is a conventional loan? You don't know. Well, why don't you ask me, what is a conventional loan?
What is a conventional loan?
A conventional loan. I'm glad you asked that. Most Americans, not all, but most Americans fall into this category. They don't serve in the military, and maybe they don't live in a rural area. And maybe they're not first-time home buyers. Maybe they've purchased homes before. They have very good credit and maybe not so much debt that they don't qualify at some higher levels. So what they do is they get what's called a conventional loan. A lot of times they'll have 20% down or maybe more that they put down on the house. The down payment, let's say 20% down. I'll tell you the numbers. If you had a $200,000 house and you put 20% down, do the math. I know you can do it. Ready? That's $40,000. Do you have $40,000? I don't think you can get a conventional loan. I mean, you could do it with less money if you wanted to, but then you're going to get private mortgage insurance.
What's that?
Exactly. Private mortgage insurance is insurance that protects the lender because you didn't put enough money down. Because if you put 20% down, you don't have private mortgage insurance. But if you put less down, they require you to pay private mortgage insurance every single month. Just an insurance policy for the lender.
Okay.
Cool.
Who is the Dandy team and what do they do?
Great question. The Dindy team is made up of a lot of our family. Like Zuzu, you're part of the Dindy team and you're here on the video right now.
Yeah.
That makes you part of the Dindy team, right?
Yeah.
Well, I'm also part of the Dindy team. I'm a loan officer. Joshua, who is your oldest brother, he is also part of the Dindy team. He's a loan officer and he's the pipeline manager. Rachel does our social media and video editing and all of that. James David, he does social media for us and he does a lot of stuff. We also sponsor him in Olympic weightlifting, right? He's part of the Dindy team. Eliza, she does some deliveries and things to some of our agents. She's part of the Dindy team. And I would say Mary Kate, she's part of the Dindy team because she's been on video. And Abigail's been on video before. Oh, I know who's part of the Dindy team. Mama.
Yeah.
Because she had all of y'all. What does the Dindy team do? The Dindy team mainly does mortgages because we're a mortgage broker. Since we're a mortgage broker, we provide mortgages to all types of people, whether that be first-time home buyers, veterans, investors. We do investor loans. We do people that are moving up, people that are moving down. Like if somebody, let's say an empty nester is someone who they had their kids, they grew up, their kids went off to college, and now there's only 2 people, but they have this really big house. They sell their house and they get a smaller house. When they do that, we help people do that as well. The other side of the Dindy team is we do also have real estate partners and help people get into homes by having real estate agents available to help them. We do that as well.